What is a mortgage escrow? We're going to talk about that next. Hey there, my name is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates, as well as some financial literacy on the side. Now, today we're talking about what is a mortgage escrow account. Now, a mortgage escrow account is essentially the property taxes and the insurance for the property set aside for you as the homeowner, as the mortgagee, right, or as the mortgagor, the person that's taking out the mortgage, set aside to pay these bills. So basically, what happens is at the time you purchase the property, you're going to set some funds aside into a separate escrow account. Now, this can be confusing. In states like California, they use we're in escrow, meaning like they're under contract and they're moving forward. So, this escrow terminology can be used a lot of different ways. In this case, we're talking about a separate account that is set up by the loan servicer. So the person that is servicing the loan, not necessarily that originates the loan. So one thing to keep in mind is, I'm a mortgage loan originator. I can originate a loan. We'll use my resources, my company, my money, close the loan under my company's name, and then we have the potential to service it under that same entity. Or we could sell it off to another servicer that might be out there in the market saying, hey, we want new loans. So the servicer of the loan is now setting aside some money, let's say $100 for insurance and $500 for taxes. They're setting aside this $600 every single month to pay these bills when they come due. Now, every county is going to have different kind of deadlines, payment dates, installment plans, whatever it may be. Greater Chicagoland, we're pretty much all twice a year. So I'll use Cook County, for instance. Typically, the bill comes out in February, due March 1st, and then we have a second bill supposed to come out, say July, paid August 1st. Sometimes it doesn't come out to September, October, and is paid late in the year. You never know. But with that said, paid twice a year. Now, in Cook County, and again, this is something you need to look into your own individual market and find out what is the timing there, is we are paying tax bills from last year over into this year. So 2024, we're paying the tax bill from 2023 in 2 installments. So if that tax bill was $6,000, it'd be $3,000 and $3,000, right? So just to give you an example, sometimes, like the state of Indiana, where I grew up, you're paying the tax bill for the current year. You live there for 6 months, you pay the bill. You live there for another 6 months, you pay the bill, right? Or you're actually paying it before it's already accrued. So that could be the case. Again, every state, municipality, county could be different. So these are the things you need to kind of understand as you're thinking about an escrow account. But conceptually, when you're thinking about an escrow account, what is it for? It's to hold that taxes and insurance. It's your money. If you went and sold your home and you got money in that account, you are getting that money back. Again, that is your money. It's not a fee. How much goes into it? Well, that depends on your tax bill. My example before, $100 for insurance, $500 for taxes. That's $600 a month. You just make your one monthly mortgage payment, and then that amount is set aside by the servicer, and the servicer pays out the insurance and the taxes for you when those bills come due. How do they know those bills come due? Is when you set up your insurance and you set up property taxes, you tell them you're escrowing, meaning that the servicer is collecting those amounts. So typically your insurance is due at the day that you closed. Typically that is your anniversary date. So if you closed July 1st of 2024, July 1st of 2025 is when that first bill is due. So you might be thinking, okay, so in 2025, I've got that bill due. So what happens is at your closing, the lender will collect a couple of months of insurance. Then you're going to make your normal monthly mortgage payments throughout the year. In 25, now you're going to have extra money set aside, a full year and maybe a little bit more that is going to go to pay that bill. Same thing for property taxes. Depending upon when the due date is, we're going to set some money aside immediately because we know when these bills are due. We're going to set that money aside so those bills are due. Then every year we're going to do an analysis. We're going to say, hey, taxes last year were $6,000. This year, they're only $5,400. Good news. That means your payment's going to go down by $50 and you have a $600 overage that they're going to send you a check for. Now, is the reality that taxes are going down? Probably not. Depending on your area, they're probably going up. But with that said, wouldn't that be nice? So an escrow account is holding those funds for you. They're going to be paying them out. They're also going to do an analysis at the end of every year typically and say, hey, based upon these changes, we need to reallocate your payment. So I always try to tell borrowers, as much as you want to try to get an exact payment on a fixed rate, that payment is probably going to change because taxes and insurance are likely going to change in the future. Thus, you're getting yourself a new payment moving forward. So let me know what questions you have on escrow. If you'd like to schedule a call and discuss it, make sure and click the link down in the description below. Thanks so much for tuning in. Stay safe, and we'll see each other again very, very soon.